on the show. The management at Latent View is now with us. Mr. Rajan is joining us. Sir, thank you so much for taking out time for us. Could you just talk to us about the ongoing business environment, considering your clients are growing so fast? What is the sort of demand you're seeing from them?
Yeah, the demand environment is pretty strong. We have been witnessing a good growth in the first 3 quarters of this year. You would have seen our third quarter results that were put out. We continue to see a fairly strong demand for the type of services that we bring to the table. The whole inflection point that I have talked about earlier in terms of organizations looking to spend more on their digital transformation initiatives, it continues to play out. And we see this across the geographies that we are present in, both in the US as well as in the Europe. So at this point in time, it is really about doubling down on some of these opportunities, bringing the right solutions and capabilities, right, so that we can capitalize on them, and then driving revenue growth. So that's what we are really focused on at this time.
Hi Rajan, this is Anisha joining in as well, and wishing you a very happy Holi. Just wanted to get your sense regarding the US business, because that contributes almost 95% to your revenue. Now, given the fact that we're talking about tightening of situation there, inflation is on the higher side, as well as a lot of companies are facing headwinds on account of the geopolitical tensions as well. Is there any worry that spends might be cut down?
Not yet. I mean, we are not seeing any softening in terms of budget allocations or spends. And this is already the first quarter, if you know, in the US. So most organizations that had decided on what their spends are going to be this year, we continue to see that momentum and those conversations. Nobody has started dialing down yet in terms of the spends. But of course, we need to see how the geopolitical situation pans out over the next few months. If the tensions increase and if there is more uncertainty, there are chances that organizations will want to be take a more cautious approach. But at this point in time, we don't see any immediate signs of any slowing down.
With rupee depreciating, Ukraine, of course, being very high as far as technology is concerned, do you think it also brings in a slight bit of opportunity going ahead?
I mean, the exchange rate is something that is outside of our control. And of course, any revenues that we get outside of India, I mean, the exchange rates would apply. Maybe the whole Eastern European supply system could get likely impacted, and some of the demand might flow more to the India offshore locations. And that could be an advantage. I mean, we have pretty much all of our offshore play out of India. And at this point in time, there could be a little bit more comfort on the part of organizations to work with organizations that are able to execute work out of an India offshore location. But of course, there are other options, like a LATAM, for example, and we'll have to see how this plays out. But at this point, we haven't started seeing clients telling us that we would rather do the work in India rather than a different location. Our clients that we are working with, they are already very comfortable and familiar with the Indian offshore environment. So I expect that the momentum will continue.
Rajan, I also wanted to get a sense regarding the client addition, because over the last couple of years, that is FY 19 to 21, we had seen some reduction as far as client count is concerned, and that was a conscious call by the company. What has been the rate of client addition? Because it continues to be very top heavy, with top 5 clients contributing almost 50 to 60%, if I'm right.
Yeah, I mean, the client concentration is high, but I have also mentioned that this is not something that we are worried about, because it gels with our philosophy of going deep and broad with a few select clients. But having said that, in terms of driving our growth, this year we have added almost a dozen clients. All of that pain that you mentioned in the previous 2 years was really about reshaping our business, exiting some of the staff aug work that we were doing. So that is behind us. In the last 12, 18 months, we have been adding clients steadily. And this year alone, as I said, almost a dozen clients, and there are a few more that we are likely to close even before this month runs out. So the addition, and the other thing that we are seeing is that most of the new engagements that we are winning are in a managed services kind of a format, where we are not just doing a single project in a fixed fee kind of a mechanism, but instead we are setting up what we call an analytics COE that can help them on several initiatives. And these initiatives as well, we are identifying through an initial consulting or a diagnostic exercise. So at this point in time, I'm not worried about the client concentration, given that overall it gels with our philosophy, and we are also adding new accounts.
Right. So now that you've achieved sustainable growth, you've done your IPO exercise. How is it getting different? Are you being able to attract more talent? Our clients, who were earlier maybe hesitant because of the listing, because of the sort of compliance that you have. Are you seeing more traction? Do you expect next 2 to 3 years to get benefit of this in the coming year, especially on talent side?
Very much so. I mean, we expect that the visibility and the brand recognition that we have achieved through the IPO and becoming a public company, it's playing out both on the demand front as well as on the talent supply side. The demand front, we see a lot more inquiries coming our way. We have ramped up our inside sales and demand gen team, our marketing activities as well. And we are also capitalizing on the lead generation efforts by having a stronger contingent right on the front end, both in terms of sales and business development, as well as in terms of account leadership. So we have been recruiting steadily, and we will continue to do so in the coming months. So the demand side is very strong, and it is gaining from the visibility that we have in the marketplace. The same goes on the supply side as well. I mean, just all these additions that we are making to the leadership bandwidth, whether it is on-site in sales and business development or account management or here in delivery and governance, we are seeing a lot more candidates interested in becoming a part of the Latent View growth story. So every week we are seeing inquiries coming from multiple candidates. We do need to figure out which one of them will fit the kind of roles that we are looking at. But the inflow is pretty strong, and overall the visibility is helping quite a bit right in the talent side.
Sure, Rajan, in the interest of time, if we can quickly get a bit more information from you regarding the outlook for the coming year. For the 9 months gone by, you have grown at a rate of around 28 to 30%, though the margins have dipped a tad bit below 30%. What's the outlook for the coming year, and also some acquisitions on the anvil, given you are sitting on cash of over 400 crores?
Right. We expect the trajectory to continue, the revenue growth trajectory to be around the numbers that you mentioned. Earlier during the investor roadshows and during the listing time, I had mentioned that the industry growth rate is at an average of 18 to 20% CAGR, and we can do much better than that given our areas of focus. That's something that you already see right in the last 3 quarters of results. We expect that the revenue trajectory will continue on an organic basis. The margin, as you mentioned, it will get impacted by a few things. One, of course, is the whole return to work and increase in travel and marketing spend. But equally important, we are prepared to double down on the investments that we need to make at the front end in tools, assets, accelerators, as well as in capability building. And we believe that some of those investments need to be made ahead of the curve. So that will have an impact. In the past, we have given an indication that 25 to 28% is our comfort zone from a margin perspective. And any supranormal margins will be ready to plow it back into the business to drive growth. So that's the same philosophy. There is no change in that. On the inorganic front, there are several interesting opportunities that we are in conversation with. We have evaluated over a dozen opportunities in the last 2-3 months. And at this point in time, we have a handful that we are considering seriously. We expect that there will be some more action in the next 2-3 months, and potentially seriously doubling down and identifying somebody that we can bring on board in the next financial year.
Okay, Rajan, we'll let you go on that note, and we're hopeful that once you do finalize that acquisition opportunity, you will speak with us and let us know how that fits into your business strategy. But